Hello everyone. So today we will be starting with the next chapter now. Amalgamation and external reconstruction is completely over. The giant chapter is finally over. Second chapter in Unit 1 of Advanced Account includes internal reconstruction. Okay. Now, this point is to be noted. Be careful. Amalgamation, you already know, every one of you, is a very complicated, comprehensive chapter, including external reconstruction. A lot of complications, workings are there, very lengthy questions are there, solutions are also very lengthy. In your exams, I repeat, in your exams, internal reconstruction can come as a perfect option between amalgamation in Unit 1. Means in your exams in Unit 1, you can have two questions. Question 1 of amalgamation 15 marks, and in option again question 1 of internal reconstruction 15 marks. And mind well, internal reconstruction is far more easier than amalgamation. It's going to be a very good option. Of course, you cannot leave amalgamation in option because in one of the years in exams, they did not ask any question of internal reconstruction. Both the options, question 1 amalgamation, option 1 again amalgamation or external reconstruction. So you may not get an option, but only 0.01% chance. If you get an option, my advice, of course, going for internal reconstruction. Far more easier chapter. So you need to understand this chapter, introduction, accounting entries perfectly well. Don't just forward the video. Each and everything listen carefully. This may serve out to be boon for you people in exams. Okay. Now, internal reconstruction. All of you watch this video clip and then I will explain you what is the meaning of internal reconstruction.
ये सब क्या पुराने सपने जो मैं आज तक पूरे नहीं कर पाई। ये खत चंबा गांव के उन भोले भाले कर्मचारियों के हैं जितने वर्षों बाद भी इस उम्मीद में बैठे हैं कि उनके गांव की फैक्ट्री शुरू हो जाएगी। तेरे पिताजी के देहांत के बाद वो फैक्ट्री बंद हो गई थी। तू बहुत छोटा था और मैं बिल्कुल अकेली इन दो हाथों से इतना बड़ा कारोबार नहीं संभाल पाई। तेरे चाचा जी का सहारा था, लेकिन उनके बगैर यहाँ का कारोबार चौपट हो जाता। ये रुपए हर महीने में उन कर्मचारियों को भेजते ताकि वो बेचारे दाल रोटी के मोहताज ना हो जाए, लेकिन वो लोग अपने बच्चों को भीख की बजाय मेहनत की रोटी खिलाना चाहते हैं, क्योंकि हर महीने खत आती है। उनमें एक ही सवाल होता है कि हमारे गांव की फैक्ट्री कब शुरू हो रही है, कब शुरू हो रही है हमारे गांव की फैक्ट्री।
बहुत जल्द शुरू होगी माँ, वहाँ मैं जाऊंगा। आपका ये सपना मैं पूरा करूंगा, चंबा की फैक्ट्री मैं शुरू करवाऊंगा।
अरे मोहित बेटे,
अच्छा बात चलता हूँ। हालत तो बहुत खस्ता है, मशीन तो बिल्कुल नहीं चल रही होंगी।
कैसे चलेगी किशन साहब, ये चाय की फैक्ट्री काफी अरसे से बंद पड़ी है। लेकिन फिक्र की कोई बात नहीं, सर्विसिंग, ऑयलिंग, ग्रीसिंग के काम के बाद हफ्ते 10 दिन में शुरू हो जाएगी।
हम लोग चलते हैं। तो ये काम आप जल्द से जल्द शुरू करवा दीजिए, लेकिन याद रहे मिस्टर सक्सेना, फैक्ट्री शुरू करने से पहले मैं मशीन की कंडीशन देखना चाहूंगा जी, क्योंकि मैं नहीं चाहता कि जल्दबाजी में किसी गांव के आदमी के साथ कोई हादसा हो जाए। चलिए। ओके,
थैंक यू सर।
थैंक यू। अभी चलिए, चल।
अब चलिए ना, फैक्ट्री पे सब आपका इंतजार करूंगा, मैं ढूंढ के लाता हूँ।
ठीक है।
Yes, this clip is from the movie Bol Radha Bol. Okay, what do you observe in this video clip? What did Rishi Kapoor do with that old factory which was not working for past many years? Can I say that he rebuilt that? He reorganized that? That is the meaning of reconstruction. Reconstruction. Construction means to build something new. Construction means to build something new. Reconstruction means to renovate, to make changes in the existing. So existing factory was there. He did not build anything new. He reconstructed that. He rebuilt that. He renovated that. He did ironing, greasing, oiling of machinery. What did he do? Reconstruction of that factory, of that company. Okay? He was left out with two alternatives. Either Rishi Kapoor would have closed that factory and wound up that business, liquidated it, or alternatively, he went for reconstruction. So basically, internal reconstruction means what? A financially sick, weak company has two alternatives. What two alternatives? First one, they may go for liquidation. Okay, first alternative, they may go in for liquidation. Liquidation means what? The end. Over. Sell your assets. You studied in second year BCom. Sell your assets. Pay the liabilities in a particular order. What order would you pay your liabilities? First, you would pay to secured creditors, then to unsecured creditors. So liquidation means the end of the company. The company winds up the business. This is one alternative for the sick company. This was one alternative with Rishi Kapoor. Close the company, forget the villagers. They go to hell, no concern with them. Second alternative, you go for reconstruction, not construction. You're not building something new. Reconstruction means changes in the existing. I repeat, changes in the existing. Now there are again two types of reconstructions. First one, we already studied in the last chapter with amalgamation, external reconstruction. And I told you, if you all remember, what is external reconstruction? Old wine in the new bottle. Just changing the name of the company. Shareholders are same, assets are same, liabilities are same. You are changing the name, re-registering it in the Companies Act, so that with the new name, new reputation, company can continue the old business. So external reconstruction, maybe it's just time for the change. That's it. Even in external reconstruction, liquidation is involved. Because what happens in external reconstruction? The old company goes into liquidation and is taken over by a new company. So even in external reconstruction, liquidation, end of the old company does take place. And there is one more alternative instead of liquidation. That is internal reconstruction. Now what is internal reconstruction? You can see that cartoon is taking a shower. Internal reconstruction means showering your balance sheet. I repeat, ugly looking balance sheet, you shower it and make it fresh, good looking, beautiful looking. It means earlier the balance sheet was not showing the correct position. Of course, it had a financially weak position, but assets were overvalued. So we bring back the assets to its proper values and we show the balance sheet at true and fair value, which is called showering your balance sheet, which is called internal reconstruction. Internally, you reorganize the things. Internally, you change the value of assets, you change the value of liabilities, you shower it and make it at true and fair values. We'll see this in detail, but remember, an alternative to liquidation for a financially weak company, either you wind up the business or as an alternative to liquidation, you reconstruct yourself, you reorganize yourself, you rebuild yourself internally by changing the balance sheet values, which is called internal reconstruction. Simple language, showering your financial position, showering your assets and liabilities. Let us see that in detail. We take up this example of balance sheet of SICK Limited. Corona going on, pandemic going on, and SICK word resembles that. So you all must be wondering why at this time again I am going into sickness, but we are talking about the financial position of the company. So balance sheet of SICK Limited as on 31st March 20. Okay, March was the time when Corona just entered into India. Now, share capital is 50 lakhs. Now you can see all this. Profit and loss account on the liability side is a negative figure. Negative figure means it is accumulated loss. Financially weak company, SICK company. Okay, profit and loss. Accumulated loss 10 lakhs. Now accumulated loss means this is not the loss of current year. Let us say suppose the company started the business in 2015. Loss kept on increasing. 2015 loss, 2016 loss, 2017, 18, 19. 5 long years loss. It kept on increasing. And now after the blast it is 10 lakhs of loss. Definitely ugly looking balance sheet. Loss of rupees 10 lakhs. Also you will observe one more weird thing in this balance sheet, that is debentures are borrowed at 15% high rate of interest and bank loan at 20% high rate of interest. Such a poor management. Obviously, such a company is going to suffer loss. So bad decisions. You are not getting the money that you could borrow at 15% high rate of interest. So much of burden on the company. Look at it. 20% rate of interest you are paying on the bank loan every year. How can a company earn profit with so huge rates of interest? So bad decisions by the management. You can say poorly managed company so far. Up till now, it's a poorly managed company and board of directors have made this SICK Limited a SICK company. Further, see very astonishing, surprising, and you can say it's a satire, paradox, goodwill of 15 lakhs. Now you may ask, why is it a satire? Why is it a paradox? Goodwill is there 15 lakhs, so what's the problem? You answer me one question. In reserves and surplus, you are showing loss of 10 lakhs. Company is making loss for the past 5 years. Company is making loss, increasing the losses for the past 5 years. How does it have a goodwill? How come this company has a reputation? So much of manipulation done by the board of directors in making the balance sheet. In audit, sir would have explained you window dressing. This is window dressing. Window dressing means to cover the loss. You have shown goodwill also on the asset side. Fraud by the board of directors. As I said, poorly managed company already. To cover up the things. Window dressing is done by showing goodwill of 15 lakhs. How is it possible? What are the board of directors doing? What are the accountants doing? What are the statutory auditors doing? One side you show there is a loss of 10 lakhs. Another side you are showing even a loss making company has a goodwill. Surprising. Goodwill of 15 lakhs. Just impossible. How is it possible? Do you all understand what I am trying to say? There is a lot of manipulation done in making the books of accounts. Goodwill and accumulated loss, not possible at all. Moreover, few more things might be possible. Machinery may be overvalued. Maybe the board of directors, if they are doing this manipulation of goodwill and P&L, if they are doing this window dressing fraud, then maybe the machinery also they have shown at higher value by providing less depreciation. Maybe the actual value of machinery would have been 15 lakhs, but by providing lesser depreciation, they are showing at 20 lakhs. Same way, maybe furniture, they have provided less depreciation. Its value must have been 8 lakhs, but they are showing 10 lakhs. Maybe stock has become outdated. You cannot sell it for 5 lakhs. Its value may be only 3 lakhs. You are showing it for 5 lakhs. Maybe there are a lot of bad debts taking place while the company is incurring loss. Proper BDR, bad debt reserve, is not provided. We must be able to recover only 4 lakhs from debtors, but they are showing it at 5 lakhs. This is ugly looking balance sheet. With this balance sheet, for many more years, you'll just keep on either covering the loss or increasing the loss, because a lot of fraud and manipulation is going on in the company. Now, what is the requirement? There is a requirement to clean this balance sheet. How would you clean this balance sheet? As I said, one alternative, the company goes into liquidation, or second alternative, it cleans the balance sheet. It reorganizes itself, it reconstructs itself. Now, how would that reconstruction be done? Accumulated loss is to be wiped off. So 10 lakhs of loss is to be removed from the balance sheet to clean the balance sheet. Is it or not? Goodwill is to be removed because the company really doesn't have any goodwill. You have to show the correct thing to the shareholders. You have to show the facts to the shareholders. No manipulation, no window dressing. 10 lakhs plus 15 lakhs, 25 lakhs is to be wiped off from debit balances. Machinery, as I said, 15 lakhs, maybe its value. So further 5 lakhs, 25 plus 5, 30 lakhs to be wiped off. Furniture, I said, suppose 8 lakhs is its true value. So 35 plus 2 lakhs more to be wiped off, 37 lakhs. Stock, as I said, that maybe 3 lakhs is its true value. So 1 lakh more, 39 lakhs. And debtors, as I said, 4 lakhs. So 1 more lakhs, 40 lakhs is to be wiped off from debit balances. How come 40 lakhs? 10 lakhs of accumulated loss you can do in calculator. 10 lakhs plus goodwill 15 lakhs 25 plus machinery 5 lakhs 30. Okay, 30 plus furniture 2 lakhs 32 lakhs plus stock 2 lakhs 34 lakhs plus debtor 1 lakh 35 lakhs. Not 40 lakhs, I'm sorry, 35 lakhs. How much you have to decrease in the debit balances and asset side? 35 lakhs. Now, how will you clean this 35 lakhs? Shareholders will have to sacrifice. Major chunk will have to be sacrificed by the shareholders. So 50 lakhs what we have to pay them, we will clear cut tell them we will now be able to pay you only 30 lakhs. 20 lakhs out of 35 lakhs is straight away sacrificed by the equity shareholders. 15 lakhs left out. Debentures we will say and negotiate that instead of 25 lakhs we'll pay you only 15 lakhs. So 10 lakhs will be sacrificed by them. Bank loan we will say instead of 30 lakhs we'll be able to pay you only 25 lakhs. 5 lakhs will be sacrificed by them. This is how 35 lakhs can be sacrificed. Major chunk 20 lakhs by shareholders, then 10 lakhs by debentures or bank loan, any of the two, and 5 lakhs by the other one. Also, we may negotiate with debenture holders and bank loan that after this, in the current scenario, we will not be able to pay you 15% and 20% interest. 10% is the interest what we will pay you in future. This is how the balance sheet can be cleaned to set off the debit balances of 35 lakhs with the credit balances of 35 lakhs. Now you may ask a question. Shareholders are the owners, so they may sacrifice 20 lakhs if they want to continue the business. Owners have to bear the loss. Why would debenture holders or bank loan sacrifice 10 lakhs and 5 lakhs? Why would the bank sacrifice that? Why would they decrease the rate of interest from 15% to 10%, from 20% to 10%? You may have this question in your mind, but they will do it. Understand it why. As I said, one alternative is liquidation. Now suppose this company goes into liquidation. You'll sell your assets and pay your liabilities. Then maybe so less amount is realized by all these overvalued assets that debenture holders may not even get 15 lakhs. Bank loan may not even be able to recover 25 lakhs after sacrificing that money what we are asking them to do. So first alternative, we'll have to sit and negotiate with them. See, if we go into liquidation, we will not be even able to pay you 15 lakhs. Maybe you get only 5 lakh rupees against 25 lakhs. We don't have sufficient assets. We will have to sit and negotiate. We can talk to the bankers that if we go into liquidation today, your liability is 30 lakhs. If we go into liquidation, you'll get only 6 or 7 lakhs. If we are able to convince, it's negotiation to be done. If we are able to convince them, maybe they say, okay, let us sacrifice 5 lakhs, because if it goes into liquidation, bigger loss, 15 lakhs is the loss we have to face. Instead of 10 lakhs, bigger loss, 20 lakhs is the loss we have to face. So it's better that we sacrifice 5 lakhs and 10 lakhs right now, and maybe in future, if the company is now managed well, we may be able to get at least some money from the company. So even money lenders, debenture holders and creditors will be ready to sacrifice in this situation to clean this ugly looking balance sheet. So what we are discussing is an alternative of liquidation. Of course, if they don't agree, then you have to go into liquidation only. But you can sit and negotiate with them and you can convince them. And as an alternative to liquidation, you may go in for internal reconstruction. So what will happen after all this showering, cleaning of balance sheet? It will be dressed well. This is not that window dressing. This dressing is proper dressing, without any fraud, without any cheating. It will be dressed well, and the company will be having true and fair view of all assets and liabilities of the company. So what do you mean by the internal reconstruction? Making changes in the assets, overvalued assets bringing at proper value, making changes in the liabilities, everyone will sacrifice, bringing them down to proper value, and as a result, the company will be having true and fair view of its state of affairs. Did you all understand this portion? So internal reconstruction, okay, in such a way that the balance sheet will henceforth show true and fair view of state of affairs. Now, what are the benefits of internal reconstruction? Maybe after the reconstruction, if company is managed well by the new set of board of directors, it may start making profits. If you don't make any changes in this balance sheet, then even if the company starts making profit from the next year, it cannot distribute dividend to its equity shareholders. Why? Because those profits, first it will have to use to write off this huge accumulated loss of 10 lakhs. So next 3-4 years, until you make profit of 10 lakh rupees, you cannot further distribute also any dividend to the shareholders. So win-win situation for everyone. Debenture holders also will get money, bank loan will also get money in future, shareholders will start getting dividend from next year, because all the losses have been wiped off from the balance sheet. These are certain benefits of internal reconstruction. Yes, now let us see meaning of internal reconstruction in detail. Look at page 1 of your study material, you'll find this. Look at it carefully. In case of internal reconstruction, the capital of a company is reorganized. That is what we discussed in the previous page, previous slide. Capital is reorganized means share capital is also changed. They sacrifice 20 lakhs. All the capitals are reorganized. Debt capital also. Debt capital means debentures is also changed. Bank loan is also changed. They are also capital of the company, but debt capital. So the capital of company is reorganized to infuse new life in the company. Because presently the company is dead. To infuse the new life in the company, it is necessary that equity shareholders, preference shareholders, debenture holders, bankers, everyone sacrifices some part, then only you can bring the life into this company. Once again, in case of internal reconstruction, the capital of company is reorganized to infuse new life in the company. It may take place by reducing the capital of existing company, as I explained you, without going into liquidation. So as we discussed, what are we doing? An alternative of liquidation. We don't want to wind up the business. So instead of going into liquidation, we are doing all these procedures. In this case, the affairs, all of you underline affairs and write down assets and liabilities. These affairs are not that extramarital affairs. No. What are these affairs? These are affairs not of a director or board of directors. These are the affairs of the company. What are the affairs of the company? Assets and liabilities. So underline affairs and write assets and liabilities. In this case, the affairs, assets and liabilities of the company are reorganized. I told you that we will bring machinery at its proper value, furniture at its proper value, stock and debtors at its proper value, liabilities side also. So by are reorganized by proper valuation of assets, reassessment of liabilities. Reassessment of liabilities, I told you, debentures, instead of 35 lakhs or 25 lakhs, they'll sacrifice 5 lakhs, bank loan will sacrifice 5 or 10 lakhs. So reassessment of liabilities, we'll have to negotiate with them. And by writing off accumulated past losses, that loss will be wiped off from the balance sheet. How come? Through the paid up value of shares. Shares from 50 lakhs, paid up value will decrease to 30 lakhs. And or varying the rights of outside liabilities. What do you mean by varying the rights of outside liabilities? I told you 15% is the right of debenture holder to get interest. We will vary that. We'll make it 10%. 20% interest we are giving to bank loan, will vary that. We'll make it 10%. So varying the rights of outside liabilities, their rights will also be changed, and different classes of shares. Maybe varying the rights of different classes of shares means a company maybe has a preference share, cumulative preference share, where dividend gets accumulated. We may negotiate with them and also say now we make it non-cumulative, so that in the year of loss, any burden on the company of accumulating the dividend does not increase. So this is the varying of rights of different classes of shares. This is how all the reorganization and restructuring takes place. Look at that sentence once again. It may take place by reducing the capital of the existing company without going into liquidation. In this case, the affairs, assets and liabilities of the company are reorganized, means changed, by proper valuation of assets, reassessment of liabilities, and by writing off past accumulated losses. How come? Through the paid up value of shares, and or varying the rights of outside liabilities 15% to 10%, 20% to 10%, and different classes of shares, cumulative to non-cumulative. So all these changes will be made in the structure, capital structure of the balance sheet, which is called internal reconstruction. Now the internal reconstruction of the company includes both alteration and reduction of capital. Two things are there in internal reconstruction: alteration and reduction of share capital. What we will be studying today is only alteration of share capital. Reduction of capital will take up in the next lecture. Okay. All of you take out your notebooks, give the heading Unit 1, Chapter 2, Internal Reconstruction, and write down this meaning of internal reconstruction in your notebooks. Pause the video and write down this meaning of internal reconstruction in your notebooks. Okay. And you can mention and underline that two things are possible in internal reconstruction: alteration and reduction of capital. What we will be studying today is alteration of share capital. Okay, pause the video and write it down. I hope everyone has written it. Let's go to the next page, and whatever instructions I am giving you in the lecture, those things you have to keep on writing it. Okay. Now, as I discussed, we'll be studying alteration of share capital in detail. Don't write anything right now. I'll give you the instruction, only that much portion you have to write. Okay. What is alteration of share capital? As you can see on the left side picture, change is the spice of life. You are just making the changes in the share capital in a way that the share capital remains same. I repeat, you are making changes in the share capital in a way that share capital remains same. Now you may be saying, sir has become mad today. How is it possible that you make the changes in share capital, then also share capital remains same? It is just like you go for a haircut. Are you altering your hair or not? But is the person changing? You are you only. Finally, you are the same person. Same thing happens here. You are changing the share capital, still the share capital amount remains same. How come? Let us see. You'll see this in the page 1 of your study material. A company can alter its share capital if it is empowered by its articles to do so. Means articles of association must authorize you to make changes in share capital, then only alteration of share capital can be done. The alteration of capital can be done under the provisions of section 61 and 64 of Companies Act 2013. This you need to write in your notebook. Give the heading in your notebooks. Everyone give the heading in your notebooks. Alteration of share capital. This is the first part of internal reconstruction. So you can number it as Roman 1 and write down alteration of share capital heading. And in that, in bracket, write down U/S under section. U/S under section 61 and 64 of Companies Act 2013. Don't write anything further. The term alteration includes the following. Don't write this. Consolidation or subdivision of existing shares, larger or smaller denomination. We'll see this in detail. Conversion of fully paid shares into stocks and vice versa. Mainly three things. It includes consolidation, subdivision, conversion. Okay? Consolidation, subdivision and conversion. Let us see these three things in detail. Give the heading below alteration. Give the heading in your notebooks below alteration, accounting entries. Okay, you'll find these entries on page 1 and 2 of your study material. Give the heading accounting entries. First, increasing the share capital. Don't write. Just understand, then I'll give you the instruction what you have to write. What do you mean by increasing the share capital? This is exactly similar to issue of original shares to the public. You're just increasing the share capital means you're borrowing more money from the shareholders. The entries will also remain same as issue of new shares and it will be as follows. Bank account debit to share capital account. Bank is the receiver, debit the receiver, bank account debit. Shares go out, credit what goes out to share capital account. So write down in your notebook, number 1, increasing the share capital, and directly write the journal entry, bank account debit to share capital account. I repeat, you can pause the video and do this. Give the heading in your notebooks, number 1, increasing the share capital, and below that write down bank account debit to share capital account. Now second way of alteration of share capital, consolidation of shares. Don't write it. I repeat, don't write it. What is consolidation of shares? In case of consolidation of shares, the shares of smaller denominations, if you have the study material with you, underline denominations and write FV face value. I repeat, underline denominations and write FV face value, are converted into shares of larger denomination. Denomination FV face value. The shares of smaller face value are converted into shares of larger face value. In such case, the paid up share capital remains the same, but the number of shares are reduced, and the following journal entry will be passed for such conversion. You'll find this journal entry is very funny over here. What is the journal entry? You all can see share capital account debit to share capital. Share capital account debit to share capital. How can you debit same account and credit same account? Observe it carefully. We have written face value also in bracket. What are we doing in consolidation? We are converting shares of smaller face value into larger face value. Say smaller face value 10 into larger face value 100. Existing, what is the face value in the balance sheet? Smaller face value 10. Share capital as a credit balance. Existing 10 rupees of face value credit balance, we close by reversing and debiting that. Therefore, share capital rupees 10 account debit. You have to mention the face value in bracket. Otherwise, your entry will become share capital to share capital. But by mentioning the face value, it changes. So existing face value of 10 rupees you debit. And now what is the new face value? Consolidation, increasing it, we have to bring it in the balance sheet. 100 rupees. So you credit and bring this in your books of accounts to share capital rupees 100 account. Existing smaller face value rupees 10, you reverse and debit. New face value rupees 100, you credit and bring in your books of account. So what is the entry? Share capital rupees 10 account debit to share capital rupees 100 account. Let us understand consolidation with the help of an example. Suppose Flexible Limited has presently 10,000 equity shares of rupees 10 each, 1 lakh. Now presently what is the face value? See everyone, 10 rupees. Can you all observe that? Now they consolidate. Consolidate means what? Small face value to big face value. So they consolidate the shares of rupees 10 small face value to rupees 100 big face value. So after consolidation, now what will it have? Amount remains same, 1 lakh. I told you alteration means what? Changes in share capital, but still the share capital remains same. You were wondering how is it possible? See, it becomes possible. 1 lakh rupees only is the share capital, but earlier it was in 10 rupees shares, so there were 10,000 shares. Now same 1 lakh, if face value becomes 100, then 1 lakh divided by 100, how many shares will be there in the new balance sheet after reconstruction? 1000 equity shares of 100 each, 1 lakh. So are you making changes in the share capital? Yes. From 10 rupees face value, we are changing it to 100. From 10,000 equity shares, we are changing it to 1000. But still, the share capital remains same, 1 lakh and 1 lakh. That's what I explained you in the previous slide. Alteration means changes in the share capital, but still the share capital remains same. From 10, you make the face value 100. From 10,000, you make the number of shares 1000. But still, share capital remains 1 lakh only. This is called alteration, consolidation of shares. Thus, total share capital remains same. Thus, total share capital remains same. What happens is, number of shares decrease from 10,000 to 1,000 and face value increases from rupees 10 to 100. In such a situation, what journal entry would you pass for the same? Equity share capital with old existing face value you have to close. So you reverse and debit that. So equity share capital with rupees 10 account debit 1 lakh, and consolidating means from 10 we are making 100. So to equity share capital, the larger face value rupees 100 account will credit with 1 lakh. So equity share capital to equity share capital, but in the debit account you have to mention the face value 10 rupees in bracket. In the credit account you have to mention the face value 100 rupees in bracket. I hope everyone is clear with consolidation. Smaller face value you are increasing to larger face value. Consequently, number of shares would decrease. Let's understand subdivision of shares. Don't write. I'll make you write. There is one trick to remember consolidation and subdivision. That entry I will make you write in the notebook. So don't write this. Okay? Subdivision of shares. Now, opposite of consolidation is subdivision. What are we doing in consolidation? Small to big. Subdivision, big to small. Divide. Divide means bigger, you convert into small. In this case, shares of larger denomination are converted into shares of smaller denomination. What do you mean by denomination? Face value. So underline denomination and write FV face value. So shares of larger face value are converted into shares of smaller face value. The journal entry in respect of such conversion would be on the same pattern as in the case of consolidation of shares, except the number of shares would increase. Now you are decreasing the face value, total amount has to remain same. So obviously the number of shares here are going to increase. And the following journal entry will be passed for such conversion reverse. Now existing is the bigger face value 100 rupees. That you will reverse and debit to close. So share capital in bracket rupees 100 account debit. And now bigger face value you are converting into smaller face value. So smaller face value rupees 10 you will bring in the books of account by crediting it. So to share capital rupees 10 account. Bigger face value 100 you will close and debit. Smaller face value which we now have to incorporate in our books of accounts 10 rupees you will credit. Let us understand subdivision also with the help of an example. Variety Limited has presently 10,000 equity shares of 10 each 1 lakh, same as previous example. But in the previous example, from 10 rupees we increased it to 100 in consolidation. Here what are we doing? They subdivide the shares of rupees 10 to rupees 5. In consolidation from 10 we increase to 100. Now in subdivision then we are decreasing to 5. So after subdivision it will have, now share capital is going to remain 1 lakh rupees only. So 1 lakh if you divide by the new face value 5, how many number of shares would it increase to? 20,000. So after subdividing it to 5 rupees face value, now what will the company have? Instead of 10,000, 20,000 equity shares of 5 each, but total amount same, 1 lakh. So now you understood why did I tell you alteration means changes in share capital, still the share capital remains same. What changes you are making here in the share capital? From 10 rupees, we are decreasing the face value to 5 rupees. From 10,000, you are increasing the number of shares to 20,000. But still, share capital remains rupees 1 lakh only. Thus, total share capital remains same. What happens is, number of shares increases from 10,000 to 20,000 and face value decreases from rupees 10 to rupees 5. But total capital remains 1 lakh. Now what journal entry would you pass in this situation? Old face value, existing face value 10 rupees, bigger one. We have to close and debit. So equity share capital with rupees 10, existing face value account debit. And subdivision means new face value is 5. What we have to bring in our books of accounts, that you will credit. So 2 equity share capital with the value what we have to now bring in our books of account, 5 rupees, both the amounts 1 lakh. Okay, so equity share capital with big face value subdivision. So big face value 10 you will reverse and debit. New face value smaller one 5 you will credit and bring in the books of accounts. I hope everyone is clear with this. Now as I said to you, there is a trick to remember, right? So now after increasing the share capital heading, all of you give the heading in your notebooks. Number 2 and 3, I repeat, give the heading 2 and 3. In that write down consolidation and subdivision of shares. Combine it. In your notebook, all of you combine the same. 2 and 3, consolidation and subdivision of shares. And the trick to remember it, both consolidation and subdivision, is equity share capital with old face value account debit to equity share capital with new face value account. Write this in your notebook. Okay, combine the heading 2 and 3, consolidation and subdivision of shares, and in that write down equity share capital with old face value debit to equity share capital with new face value account. So this will serve the purpose for consolidation also and subdivision also. In consolidation, old face value was 10 that we debit, new face value was 100 which we credit. And in our example of subdivision, old face value was 10 which we debit, new face value was 5 which we credit. So in both the examples, consolidation and subdivision, this common entry is what you have to remember. I hope everyone is clear why this is called alteration of share capital. You are changing the share capital structure, basically face value, but total amount remains same, so alteration. Okay. Now, let's take the next one. As I said, section 61 and 64 covers 3 things in the first slide we studied. Consolidation, subdivision, and third was conversion. What conversion? Conversion of shares into stock and vice versa. Look at it, this is there in your second page of study material. A company can convert its fully paid equity shares into stock. Now, what is the meaning of stock? Stock is not divided into equally and serially numbered parts. Parts means face value. And then parts and write face value means stock is not divided into equal and serially numbered face values. It is not divided into equal face values. And hence, the members will hold so much amount of that shares have been converted into stock rather than so many shares. Means stock just has a total value. Okay, it doesn't have quantity and it doesn't have face value. See this example. Thus, if A held 20 shares of rupees 100 each previously, now what is the quantity of shares? He has 20. What is the face value of those shares? 100. 20 into 100, what is its value? 20,000. It has quantity also 20, it has face value also 100. After conversion into stock, he will be said to hold only rupees 2,000 stock. Sorry, 20 into 100, 2,000, not 20,000. Now this 2,000 rupees stock doesn't have any quantity like 20 shares. It doesn't have any face value like 100. It has only total value rupees 2,000. That's it. What is the benefit of converting the shares into stock? 20 shares of 100 each. If you sell one share, you are selling 100 rupees value shares. 2 shares, 200 rupees value shares. If you want to sell 150 rupees value shares, can you sell 1.5 shares to someone? No. Half a share cannot be sold. What is the benefit of converting into stock of rupees 2,000? You can sell stock of rupees 150 because it doesn't have any quantity like 20 shares. It doesn't have any face value. Any part of stock can be sold. 5 rupees stock can also be sold. 1 rupee stock can also be sold. 22 rupees stock can also be sold. So here also we are bringing the changes in the capital structure, but the total capital value remains same, rupees 2,000. So you all need to understand what is the meaning of stock. No quantity, no face value, only total value. Give the heading in your notebooks. Fourth point, conversion of shares into stock and vice versa. And there write down stock means, write down this what I am telling you. Stock means no quantity dash no face value dash only total value. So earlier he had 20 shares of 100. Value was 2,000. Now if you convert it into stock, he will not have 20 shares of 100. He will simply have stock of rupees 2,000. So stock will not have any quantity. It will not have any face value. It will just have total value of rupees 2,000. Now what journal entry you will pass? The conversion of shares into stock is recorded in the books of account by the entry. Share capital account you have to close and debit. And since we are converting into stock, what you have to bring in your books of account to capital stock account. And the stock can also be converted into shares, means this 2,000 rupees of stock, you can again convert it back into 20 shares of 100 each, or 200 shares of 10 each, or 1,000 shares of 2 rupees each. Any other face value shares you can convert into. The journal entry in such case would be just opposite of above. You'll reverse it. If you reconvert the stock into shares, then the entry will become capital stock account debit to share capital account. So capital stock you'll close and debit, and again you are converting it into shares. So share capital you'll credit and bring it in the books of accounts. Okay, let us understand this also with the help of an example. Suppose Modified Limited has presently 10,000 equity shares of rupees 10 each. So again 1 lakh, same example we are continuing. Now they decided to convert it into stock. So after the conversion, it will have equity stock of rupees 1 lakh. That's it. No quantity 10,000 equity shares, no face value 10 rupees, only total value rupees 1 lakh. Equity stock of rupees 1 lakh. Now what journal entry would you pass in this situation? Equity share capital account you'll close and debit with 1 lakh, and to equity stock account you'll credit with 1 lakh. Capital stock means equity stock, and if you convert preference shares then preference stock. So whichever equity or preference stock you are converting, that we have to substitute in the word capital. So to equity stock account 1 lakh. Okay, in your notebook give this fourth heading, convert. Okay, you have already given the heading and written this: no quantity, no face value, only total value. Now below that also you write down the journal entry: share capital account debit to capital stock account, and write down that note also. Okay, pause the video and write this: share capital account debit to capital stock account, and write that note also. The journal entry, if the that complete note, the stock can be converted into shares. The journal entry in such case would be just opposite of above. Write that note also. So I hope everyone is clear with this: alteration of share capital, consolidation, subdivision, conversion. These are the main three cases of alteration in which changes are taking place, but still the total share capital is remaining same. Now, last but not the least, cancellation of unissued shares, not relevant because it will not have any journal entry. What do you mean by cancellation of unissued shares? Right now, let us say company has 1 crore shares of rupees 10 each in authorized capital. I repeat, 1 crore shares of rupees 10 each in authorized capital, out of which company has issued 60 lakh shares of 10 each in the public. How many are unissued? From 1 crore, company has issued 60 lakhs. So how many are not issued? Unissued 40 lakhs. Now company cancels 10 lakhs from that. Company says we will never be required to issue 40 lakhs in future. We will not require more than 90 lakhs. So what it has to do? Just change the memorandum of association. That's it. Because authorized capital we write only in the balance sheet and double underline. Go to the memorandum of association, from 1 crore decrease it to 90 lakhs. You are just cancelling the unissued shares. So no journal entry would be passed. And no company would do it. Impossible situation in the real world. Why would any company put an axe on its own leg? Right? Why would a company put an axe on its own leg? No one will cut his own leg, because what if in future you need the money? So company would not do it. But if at all they do it, then they just have to change the memorandum of association. No accounting entries to be passed in the balance sheet. Instead of 1 crore shares of 10 each, henceforth after making the changes you would write 90 lakh shares of 10 each and still double underline, not to be included in the total. So read this: cancelling unissued shares means decreasing the authorized capital. No accounting entry is required for this. Changes are to be made directly in the balance sheet mentioning new authorized capital. Don't write this in your notebook because we are not going to have any journal entry and we are not even going to have it in the practical question. So I hope everyone is clear with today's concepts of alteration of share capital. Now, since this lecture has already consumed a lot of time, about 50-55 minutes, so practical questions we will start in the next lecture. All of you note down the journal entries properly, learn it by heart, so that next live session when we meet, I'll be asking you those entries and you must be able to answer it to me. Practical question 1 and 2 of alteration of share capital we will start in the next video lecture. So that will be all for today. Bye everyone. Take care. See you in the next lecture. Bye bye.